All right, today we are diving deep into two candlestick patterns that are honestly like an early warning system for major market shifts. We're talking about the morning star and the evening star. If you can get these down, you'll start to see when a trend is running out of gas and is just about to slam on the brakes and head in the other direction. I mean, that's the big question, isn't it? How do you actually see a huge shift in momentum before everyone else piles in? Well, the answer is often hiding in plain sight, right there in the story the candles are telling us. And that story, it starts with one really crucial clue.
Okay, so let's get into this. Before we can even begin to understand the star patterns, we have to talk about market gaps. I want you to think of them as the opening scene in a movie. They set the tone and hint at the plot twist that might be coming.
So, what exactly is a gap? It's actually super simple. It's when a stock closes at one price, say $100, and then the very next morning it opens way up at $104, with zero trading happening in between. That blank space you see on the chart, that's the gap. And man, it tells you a ton about what the market is thinking. This is what's so cool about it. You're literally seeing the market's psychology on display. A gap up, on the left there, is just pure bullish excitement. Buyers are so pumped they're willing to pay a premium the second the market opens. On the other hand, a gap down, that's just raw bearish sentiment. Sellers are practically tripping over each other to get out. Getting this gap psychology is the absolute key to unlocking these star patterns. So let's move on to our first pattern and see how this all fits together. Meet the morning star. But don't just think of this as a static picture. Think of it as a 3-day comeback story, you know? It's where the bulls, after getting totally crushed, stage this incredible rally and take back control. So the official definition, the morning star is a bullish 3-candlestick reversal pattern. You're going to find it at the bottom of a downtrend, and it's a really powerful sign that all the selling pressure is finally drying up and a new uptrend might be just around the corner. And here is that 3-act play laid out perfectly. So on day one, the bears are completely in charge, just hammering the price down with a big ol' red candle. Then on day two, the market gaps down, which looks even worse, right? But then it just stops. It stalls. That tiny little candle, a doji or a spinning top, that's pure indecision. The bears are suddenly getting nervous. And then day three, the grand finale. The market gaps up and a powerful blue candle storms back, taking back most of the ground lost on day one. The bulls are back in town. Okay, so how do you know you're looking at the real deal and not a fake out? Just use this checklist right here. First, is it happening in a clear downtrend? Check. Is day one a long bearish red candle? Check. Does day two gap down and then show that moment of hesitation? And finally, does day three gap up with a strong blue candle? If you can check all those boxes, you've got a really solid signal on your hands. Now, you know, for every hero, there's a villain. And for every bullish comeback story, there's a bearish ambush waiting in the wings. So let's flip the script and meet the evening star. It's the perfect mirror image, telling the story of how a strong uptrend can just suddenly fall apart. And as you probably guessed, the evening star is a bearish reversal pattern, and it shows up at the top of an uptrend. It's the exact dark twin of the morning star. And it's basically screaming that the buyers have lost their grip and the sellers are about to run the show. The story plays out in a really familiar way, just in reverse. On day one, the bulls are on top of the world, pushing prices higher with a long blue candle. On day two, the market gaps up again, but the party suddenly stops. The rally stalls out, that little doji, that's the first crack in the bulls' confidence. Then on day three, the floor just drops out. The market gaps down, and a massive red candle erases all of day one's gains. The panic is starting to set in. And yup, just like before, we've got our trusty checklist. Is the pattern sitting at the top of an uptrend? Is day one a strong, confident blue candle? Does day two gap up into that moment of doubt? And does day three gap down with a really decisive red candle? If you've got yeses all the way down, you're looking at a valid evening star. Okay, so we can spot them, we know what they look like. Now for the most important question. How do you actually trade them? Let's break down a simple, actionable playbook for how to get in, and just as importantly, how to manage your risk. And this right here lays out the game plan beautifully. For a morning star, you're looking to go long, to buy, somewhere near the close of that big, powerful day three candle. Your stop loss? Simple. It's the absolute lowest point of the entire 3-day pattern. For an evening star, you just flip it. You go short near the close of day 3, and you put your stop loss at the very highest high of the pattern. It's clean, it's systematic. Just remember, the key is to wait for day 3 to close. That candle is your confirmation. Jumping the gun is like trying to guess the end of a movie, and it almost never works out well. Now here is a really important insight. Because these are 3-day patterns, they're actually considered pretty darn reliable. The story has had a full 3 days to unfold. And what that means is, unlike some shorter 1 or 2-day patterns, you often don't need to wait for a 4th day to confirm the signal. Both aggressive traders and more cautious ones can usually feel comfortable acting on the close of day 3.
Before we wrap up, I want to leave you with something a little bigger. You see, memorizing patterns is step 1, but real mastery, that comes from understanding the psychology, the human emotion that's driving them.
This quote just nails it. The real goal isn't to become some kind of pattern-spotting robot. It's to learn how to read the collective mind of the market. All the fear, all the greed, all the indecision that actually creates these shapes on your screen in the first place. Think about it like this. Learning patterns is like learning to drive a specific model of a car. But once you really understand the principles of driving, steering, accelerating, braking, you can pretty much get behind the wheel of any car. It's the same thing with charts. Once you learn to read the thought process of the buyers and the sellers, you can interpret pretty much any pattern the market decides to throw at you. So we've basically given you the grammar and the vocabulary for 2 really powerful market stories. The only question left is, now that you know the language of the morning and evening star, what story is the market telling you today? Go have a look.